Motilal Oswal Business Cycle Fund. Will investing in this NFO help you in your wealth creation journey in the long run or not? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to take the right financial decisions and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether this will be a good fit for our investment portfolio or not, let us first learn some basic things about this NFO. So as an NFO, it opens on 7th August 2024 and is open until 21st August 2024. And some of its key features are it belongs to the category of thematic equity scheme of business cycles, and it has an open-ended fund type, and the benchmark index for this fund is Nifty 500 TRI. And the minimum amount you need to start investing in this fund is just 500 rupees. And the fund managers for this NFO are Mr. Ajay Khandalwal, Mr. Atul Mehra, Mr. Niket Shah, Mr. Santosh Singh, and Mr. Rakesh Shetty. And the exit load for this NFO is 1% if you redeem it within 90 days. So these are some of the key features of this NFO. Now let's take a look at the investment philosophy and the investment objective of this NFO. So it aims to invest at different stages of business cycle in the economy. So it can provide long-term capital appreciation to the investors by focusing on riding the business cycle through dynamic allocation between various sectors and stocks at different stages of the business cycle in the economy. So now, as we have taken a brief look at how this NFO works and what are its basic details, now let's move on to analyzing whether this will be a good fit for investment portfolio or not by analyzing the pros and cons of investing in this NFO. First, let's take a look at the pros of investing in the Motilal Oswal Business Cycle Fund. So as a fund, this is diversified among the top performing companies which undergoes different stages of business cycle in the economy between various sectors and stocks. So if you're an investor who's seeking for allocation to the different stages of business cycle in the economy between various sectors and stocks, then this might be a suitable fit for you. And also, if the new trend and emerging sector like this performs and delivers well in the market, then it can definitely boost the overall returns in your investment portfolio as well. So as an NFO, it applies a high risk and high return concept. So the higher the risk you take, returns you can potentially get from this NFO. So if you're an aggressive investor, this might be suitable for you if you're bullish on investing in the different stages of business cycle in the economy between various sectors and stocks. So these are some of the advantages you get from investing in the Motilal Oswal Business Cycle Fund. Now let's move on to understanding the cons of investing, because the cons are equally important to know as well as the pros, because the cons reveals the potential risk you might be undertaking by investing in this NFO. So now let's take a look at the cons. So as I have already previously mentioned, that this NFO applies a high risk and high return concept, which means if you're going to take high risk, especially in an equity fund, then it's riskier to invest in a short term period, because in short term period the market is highly unpredictable. But if you choose to invest in a long term period, like for say more than 7 to 10 years, then the market cycle would also have gotten completed. The returns would also be a little bit more stable compared to the short term period, where it's highly unpredictable, because in an instance it can go to a high and a low. Like in an instance it can perform really well, and in an instance it can also go through a period of low returns, no returns, even to a period of negative returns. So as it is highly unpredictable in the short term period, it can be highly risky for a short-term investor to invest in it to achieve their short-term financial goals. So in a highly risky fund like this, it's better if you choose to invest in a long-term period rather than a short-term period. Also, as an NFO, we do not have a proper track record or research about this NFO, about how it will perform in the long run. So before analyzing and taking a calculated risk, if you choose to invest in this NFO and add it to a core portfolio, it will not be be suitable to add it to a core portfolio, because without proper analyzing, we are not taking a calculated risk here, we are only taking a blind risk here. So risking your core portfolio or an NFO like this without a proper track record is definitely riskier, which we need to avoid. Because just because this business cycle is performing in highly trendy right now, or is performing good in the market, doesn't mean that all new trends or emerging sectors will translate into stock market returns. So if you choose to still add it to your core portfolio, there is a high chance you may expose your portfolio to negative triggers, because it is not flexible and dynamic compared to other diversified funds, because it only choose to invest around the business cycle theme. So it can even add more volatility to your portfolio because it has high concentration risk. So if this new trend and emerging sector underperforms in the market, it can definitely impact the returns in your overall portfolio. So to invest in a thematic fund like this, the timing and circle of competence should be on your side, which is definitely hard to time it because the market is highly unpredictable. These are some drawbacks of investing in a thematic fund like this. So you need to consider all these factors thoroughly before choosing to invest in this. So what is the final takeaway? Should we invest in the Motilal Oswal business cycle fund or not? As we can see from our analysis, this is not a beginner friendly fund to start your investment journey with. So if you are a first time investor, or even if you are a conservative investor who's not willing to take any risk, you should avoid investing in this fund, because this is a highly riskier fund. But if you still want to invest in a business cycle thematic fund, then there are other existing business cycle thematic funds out there in the market with a proper track record of at least 7 to 10 years. So instead of investing in NFO like this without any track record right now, you can invest in other thematic funds with a track record of 7 to 10 years, where you can analyze how it has performed in the highs and lows over the course of 7 to 10 years, over a course of long term period, to take a calculated risk. But if you invest in here, you might be taking a blind risk, which might be very riskier for your core investment portfolio. So it will not be suitable to add your core investment portfolio also without any proper research or proper track record. But if you still want to invest in it just to see how it will perform over term, then you can definitely invest it through your satellite portfolio with some surplus money. Like if for this fund option, the minimal investment amount is just 500 rupees. So if you are having a surplus amount, then you can definitely invest it through your satellite portfolio with a minimal investment like this for an experimental basis. And also, this will not be suitable for you if you do not know when to enter and exit from a business cycle fund. So for a thematic fund like this, you need to know when the thematic fund will be performing well in the market, and you need to get out before it crashes. So you need to time the market properly to gain the potential returns. So you need to have sufficient knowledge of the market, you need to have some experience before choosing to enter in a thematic fund like this. So if you do not have that kind of knowledge, or if you do not have the time to research as well, then this might not be suitable for you. So but if you're still having doubts whether this will be a good fit for your investment portfolio or not, you can definitely consult with your certified financial planner for the suitability of this fund with your investment portfolio. They will check the investment objective, your risk tolerance, and what is the overlap ratio between your investment portfolio and the investment portfolio of this fund, and what kind of allocation or how much allocation you need to give to this fund option to achieve your financial goals better. So they will be able to look at all these angles and give you their personalized financial plans for you to achieve your financial goals in a more better way. They will craft investment strategies especially for you to achieve your financial goals in a more smarter way. So they will try to help easen up your investment journey by making it more hassle free for you. So definitely involving a professional like a professional financial planner will help in your investment journey and planning your financial journey more easier for you. So you can definitely consider investing through a professional like this also. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description.
Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.